Very good evening to the esteemed office bearers and members of FADA. I am deeply honored to be here and extend my sincere gratitude to FADA and Bharat sir for providing this wonderful opportunity to present to such a respectable association. I recognize that I am speaking to business leaders who play such a large role in enabling the creation of the country's infrastructure, both in the country and in the states, and who are part of this sector, which is one of the largest employer in the country and whose work keeps the wheels of the economy and its citizens moving. Today, we will dive into simple checks that each business leader needs to perform on the dealership's insurance program and how to navigate the complexities of claims handling. So let's get started. So, as I told you, it's just the insights on dealer policies and claims management. We will be more worried about the dealership's assets and stocks and not going into areas of vehicles that you sell. Thank you. So, we are a broker since 2003 and our premium handling book is exceeding 250 crores. So we do provide digital platforms for our clients to keep track of their policies, renewal dates, claim statuses. Everything is there at the touch of a button. So our vision and philosophy, it is expertise, empathy, and commitment is the foundation for us. The latest of the awards that our company has been provided is the ET Business Leaders Award for Excellence in Insurance in 2024. So now we dive into the main core subject, which is coverages that each dealership needs to put in place. One is the property damage section for what we call as the Lagu, Sukshma or the fire insurance policies to cover the building, showroom, workshop and stock of vehicles and display and demo vehicles which are not registered. So we need to have a fire insurance, burglary insurance. Public liability is increasingly getting required because there could be a fire accident in dealership premises which can spread to adjacent premises, thereby creating a liability to the dealership. So public liability is something which is increasingly important in today's age. Plate glass, because the entire front facade of a dealership is all full of glass. So plate glass policy is something that we need to have in place. Money insurance, I'm aware that the quantum of cash that is handled is coming down drastically across the dealerships and in this industry, but still there is significant amount of cash and the money insurance policy should be put in place. Fidelity guarantee, because the employees are dealing with cash and stocks, we need to keep a tab and any risk because of any infidelity by our team members needs to be covered. So a fidelity guarantee policy also to be in place. So demo cars, as I told you, need to be covered under the policy if they are not if they are not registered. So if it's a stock, you need to cover. If it's registered, you need not cover. So we will just look at a key insights that what every business owner keeps to have a tab. New vehicles, the sum insured is preferably to be divided into 4 categories, which is stock of new vehicles, customer vehicles, which is there for service or repair, spares and accessories, and pre-owned vehicles. This is the large segment that we are trying to divide the entire sum insured into. So with the advent of GST, there is a issue that the stock that is normally shown in the DMS systems is always mostly excluding GST because input credit of the GST is taken during purchase. However, in the event of a claim, the new standard that is put in place is the value of stock on the day of loss would be considered including GST. And hence, we want each of the business leaders to understand that the total value of stock to be insured is including GST, even though your books are not representing of the GST value. This is basically because in the event of a total loss, the GST department would raise a request to reverse the GST, and hence a reversal of GST needs to be done. So the sum insured should encompass GST, otherwise unnecessarily we will end up with a lot of underinsurance and lower recovery in the event of any claims. Customer vehicles, I think all of you know it's a thumb rule method that we need to adopt as to what could be the maximum number of vehicles on any given day at the service stations, and accordingly the sum insured for that, even when there are multiple sub-brands of the vehicle, we need to have a thumb rule of how to ascertain the average value and ensure that a good reasonable sum insured is taken, keeping in mind the highest level of vehicles that you will handle rather than the average. Spares and accessories, again it's the same system where the DMS mostly will not have the value of GST, but however the insurance policy is best designed when it is including GST value. So please ensure that the sum insured opted is including the value of GST. Pre-owned vehicles, here there are various ways that dealerships keep stock of vehicles which are still not brought into their books. There are sometimes customers who park their vehicles and then recover money as and when they are sold. So you should ensure that the description of property that you give is including all these things, so that there are no cumbersomeness in the event of a claims handling. So, like all of us know that the dealership business can be seasonal in nature. So, whenever it's a peak season like the Diwali, Pongal, New Year, please ensure that the sum insured is either topped up during that period, or a separate short period policy is taken to take care of such contingencies. So one of the most important issue in any insurance policy is occupancy. So in most businesses, the stock is always inside the premises and not in the open. However, the automotive industry is uniqueness, where the stock of new vehicles are sometimes parked in open within the premises and sometimes in open yards. So both are very different in nature and attract a very different rate. The stock yard is much higher in rate both on the flexa perils and the act of God perils risk. So please ensure that open yards, there is separate value given and policy taken, so that if there is any claim, you will not have any challenge when the proper rate is paid to the insurers. And of late, we find, especially in metro cities, lot of basements are there, and especially two-wheelers and accessories and stocks are being stored in basement. So it is always prudent to keep the insurer informed that there is a basement in that particular risk location. So fire insurance is location specific, which means we have to give the exact addresses of all the locations where stocks are parked. So please ensure that all addresses are given. And what we also see, which is very peculiar to the automotive dealership business, is that many a time the locations are being shifted during the year, or a new additional service station, new additional showrooms are included. So whenever there is a change, please ensure that the new locations are added and the old locations are deleted. I have personally seen multiple claims which have not been settled in the insurance industry. It is basically due to the risk location address not being proper. So today we have the GST certificate which has the entire list of locations properly captured. So I would personally want the business owners to ensure that their teams have captured all the address details into the policy document properly. So customer vehicles held in trust. As we spoke earlier, the customer vehicles need to have separate sum insured for easiness. It is not mandatory. However, what we are suggesting is to, if there's a separate sum insured for customer vehicles, it makes the handling of any claim much easier and smoother. The issue here that arises is there are two policies. What do we do? How do we do? So the policies of the customers are there, and the policies might be either comprehensive in nature or it might be only third party. Whereas you as Baileys are responsible for the goods that are this stock of vehicles that are parked in your place. So what we always say is, it is better we ensure that we insure the customer vehicles, and at the time of any claim, we need to get the policy copy of the motor vehicle, and if a customer accepts to make a claim under his policy, we can do it. Or if he says, no, the dealership is only responsible, then we can make a claim under the dealership's policy. So now we'll move on to claim aspects. The important point is, wherever there is loss of goods which cannot be salvaged, then the GST department ensures that you reverse the GST input credit taken. So that is where I had advised that the sum insured should be including GST. The GST reversal can be done on the monthly basis return or the DRC 03, whichever is convenient. Customer vehicles being used vehicles, if there is a claim for the customer vehicles, then there is always a depreciation that the insurer will apply. The same is not there either for your new vehicles or for your stock of accessories and spares. However, the uniqueness is, since the customer is getting a new for old, then obviously there will be a small depreciation. But these are things I think can be debated as to the percentage of depreciation that can be applied, and that's where the claim handlers nuances come in place to ensure that proper discussions are done and the lowest possible depreciation rate is arrived. And there is always especially for spares, there is always a deduction for slow moving and non-moving. However, again it is debatable because we have represented in multiple claims and one without any deduction for slow moving, non-moving. It is only important for us to show that these are stocks that will get consumed over a period of time, and it does not mean that there is no sale value. So many of the DMS formats I have seen always have a column of slow moving, non-moving in that. But however, when these stock statements are being shared to the surveyor, we would request that such unnecessary columns be deleted so that the number of questions that we handle with the surveyors can come down drastically. So what is the documentation that we need to have whenever we are making a claim under the dealership policy for customer vehicles? A letter from a customer making a claim against the dealer, because the insurer will say why a claim is not admitted or taken up under the vehicle policy whenever there is a comprehensive policy. So we should take a request letter in a format which is simple and easy, so that the declaration is made available by the customer. Motor policy copy is also important. This is primarily to understand what is the IDV given in the vehicle, and what is the sum insured adequacy work will become much easier. Confirmation from the customer that they will not lodge any claim on their motor policy. This is very important because all of us know that nobody can make two claims for a single incident. So these three are the simplest documents that we need to get from a customer before we deliver the vehicle. We have seen many a time dealerships deliver the vehicle and then take their time to go behind the customer and get these documents. So these are simple things that we can put in place as a process so that they are duly followed by the service centers or the repair centers, so that these documents are collected at the time of the delivery of the vehicle itself. The last of the points is the trade certificate requirement. I think all of us know that without a trade certificate, you cannot register a vehicle. But however, there are 4 important add-on covers which we strongly recommend that each dealership should include. One is called IMT 59, IMT 60, IMT 61 and IMT 65. These are basically covers where a new vehicle which is used for demo can be used by the dealers, owners for their private use. There are some things which is where the vehicles can be used for tuition, where the vehicles can be used for test drive, and for repair of the customer's vehicle at a different place. So these are 4 important. I'll just repeat the IMT numbers for ease of understanding. IMT 59, IMT 60, IMT 61 and IMT 65. These 4 IMTs inclusion will make your trade certificate policy robust so that any risks that fall upon that can be duly covered. So we'll, as a sum up, I'll just come to the key takeaways. The most important is stock in open yard. This will attract much higher premium. Don't take a floater policy, including your showrooms and a yard separately, because highest of the rates will be applied and there will be too much of premium wasted. So please take a separate policy for the stock in yard and separate sum insured for the stock in dealerships and in service centers. So number 3, verify customer vehicle insurance before service and collect the policy. This is most important whenever an incident has happened at the service center. Notify insurer before adding new locations or change in location address, because as I told, it's location specific. Any location you miss, then the claim is not tenable. Ensure demo cars are insured separately, but many of the car dealers they don't insure that, so that can be considered as stock and claimed either under the trade certificate policy or the stock insurance policy based on the incident. So this is just again a small takeaway which we have explained in the earlier slides. So these are very, very simple things that the leadership team of the dealership can just have a tab when the insurance policies are renewed, because most of the times the management team of the dealers are not involved in these paperwork. So the only thing is, whenever the same is being brought up to you for your approval, please ensure that these few points that we discussed are properly taken care, and it will make life much easier and smoother in the event of a claim. So thank you for this opportunity, and if there are any questions, I'll be happy to take it.